What is up, YouTube? Side note, this should be recording on my new mic, so let me know in the comments if this was worth the $120 I spent. I'm sure I can do some finagling around with the settings to make it sound better. I'm still kind of learning all this shit, so yeah. But today's video is going to be about how to do credit spread, so it's gonna be kind of a quick little overview on it. Let's see. Let's see how they're done. We're gonna do it on the SPY. SPY did pretty decent today. It looks like. I mean, that's actually kind of like a normal day. You know, if the stock market and the general world wasn't so crazy. So, yeah. Let's see on the SPY now. Let's see. Go to trade options. This is the Robinhood, if you can tell. Okay. So what we are going to do is first we're going to sell. We're just going to do like a call spread, call credit spread. You can do the same thing with puts. But basically, if you watch my past video on how to do a debit spread for dummies, it's basically you pay. You're basically long on the option, and so but to give yourself security, you pay, so you don't completely lose your premium. You sell another call along with purchasing one. It limits your profit potential, but it also limits your risk a hell of a lot more. Because, I mean, you see some of these SPY options, I mean, 198 times, 100. I mean, that's basically $200 right there for just one option. A call credit spread is the opposite. You get paid to take out the option, but you don't want it to go past it. So, past the strike. So, let me give you an example. Let's say we want to sell the 385 call, and then we will, let's just say we'll do 390. So basically, as long as we're in the profit, as long as it doesn't go past 385, and even then we're still in the profit because the wider range, but we start losing our maximum premium the more it goes up until 390. So just double check. Luckily Robinhood has this handy little chart here, which is pretty nice, but you can see the profit zone pretty much stays all the way green up until our strike of our initial sell of 385. So basically 385 is our max profit. But once we start going up, let's see, you can see it's starting to fall down quite a bit, and it'll shuffle around depending on what the options are trading at. But once it crosses there, there's kind of a tiered loss if it just goes barely over 390. And then, once it reaches 390, it's max loss of 337, but basically you just have a minor loss potential after. Looks like with this one 386, and then you start losing money. So yeah, but this strategy is good if you're bearish on a stock. So if you think it's gonna stay around like what it is now, 383, 384, then you're betting on that it's not gonna go past 385, 386. And you can see we'll do it. So it's good, especially in a bear market. I mean, you're still at risk of a certain jump day. This is quite a bit of a riskier one. Normally, I'd probably do one that's like 395 and up because I'm a bit of a pussy. But even then, you can still have jumps, especially if the expiration is long enough. And so, yeah, I guess we'll exit out of these, and I'll give you another example. So let's switch from the SPY. Let's do something else like let's do AMC, the meme stock, apes unite. All right, so that's kind of let's get the expirations dates out a little bit longer. Let's do July. That's a bit more interesting premium wise. Let's sell the 15 call, and we'll buy, I don't know, the 17 call, because we don't think it's going to shoot up too much. So it looks like the profit, It's a lot more conservative because if you just sold the $15 call, you'd get $63, but you'd be liable for paying back the shares that go above that, unless you own the specific stock yourself, like the 100 shares. So then at least, hopefully, you bought it under 15. That's the wheel strategy, which I will need to make a video on that soon. So keep watching and subscribe to the channel if you want to learn more about stock trading strategies. Yeah, and other stuff too. Yeah, so right now it's like the product's kind of boring. I mean, you can stack it up. Let's see what this max loss might be. Yeah, I mean, I wouldn't really recommend this one. This one I just pulled out randomly, but the profit and loss, it's betting. I mean, if you look at the ratios, let's see, implied volatility 116, and yeah, I mean, it's all right. I mean, basically the reason why the premium is so low is because it's unlikely that it'll go up that far, is what everyone's kind of universally assuming. But honestly, the risk to reward ratio is too low for me that it just would not interest me at all. But you know, you could make $25 off of it if you want to, you know, if you're bearish on it. But the 175 max loss is kind of the SPY was a lot more interesting, but the SPY's a lot, you know, a lot more expensive, so, and a lot more active. So yeah, I guess to summarize, we'll go back to SPY real quick. Is a call credit spread is where you are bearish on a stock. You do not believe it's going to go past the price you're selling at the strike price. So yeah, it's a great strategy for if you don't think the stock's going to go up, and you can sell a call to a bull, and you know, make some money if you feel like the stock's going to be flat or, you know, even fall. So it can help you. I mean, if you own the stock, it's a great way to have insurance, get some extra money. If you believe the stock's going to be flat for a while or not go above, you know, it's great for just quick little options trades. If you're more of like a day option trader, it can be you know, it's still a bit of a gamble because nobody really knows. I mean, you have all the different tables and stuff, but yeah, different like stock charts and different tools and stuff like that. That can definitely help, but yeah. So yeah, that is a call credit spread. Ooh, decent profit right there. $18. That's a lot more fair of a ratio compared to the AMC. But anyways, yeah, side tangent over. Yeah, that's how you do a call credit spread. Leave a comment if you have any questions, or if you want to just say, hey, you know, I'll respond. So yeah, have a great rest of your week, traders.